Hello friends, welcome to my channel and thanks for watching this video. Friends, welcome to another series of USA weekly market report as Friday is already over. So we had a very interesting week that has just passed, and we will definitely have a much more interesting week which is yet to come. So let's start this video with lots of information and the development which has happened. So as you can see here, how Dow closes a record high. So this is one part of the story, along with what the Fed is doing and what's happening in the bond price, in the currency, as far as the oil is concerned. So everything is running in a haywire, and everything is I would say not stabilized, because you will see quite a sharp move even in the bond prices. The bond prices are moving like stock. Sometimes you can see 10% up, you can see 10% down. So this is not the way market, or more specifically currency bonds, are moving. This is not the normal time, and we can see how this is going to move. Along with that, you have the Fed, which is saying that we are now ready for taper, but and we are not going to do anything with the interest rate. And with another news is about the reappointment of the Fed chair. Now we don't know the same chairperson will again reappointed as far as the J. Paul is concerned, or if there is anyone who is going to be a new appointee. But the thing is, we have seen this thing again and again. Whomsoever will come and sit on this particular chair, he or she will be in favor, because either you're talking about Democrat or Republicans, they both want lose money, they both want lose currency. Otherwise they can't sustain the debt which they have taken in the past decade. So this is one thing that you need to understand. So it doesn't matter the name or the face, but what matters is the activities which they have done in the past, which they are doing right now, and which they will probably do going forward. Now this inflation kind of thing, this is the thing. I mean, it doesn't matter whomsoever is saying what, but the thing is, this inflation makes the market volatile. It is doing the same for the past 1 or 2 months. You can see the kind of move that the market is showing, that any financial instrument or basket of financial instruments are showing. But until and unless this inflation data gets stabilized, we will see these kind of moves on with both the sides. Hopefully, as far as the trend or ranges are concerned on different financial instrument, whether you're talking about bond, oil, or equity market, or even cryptos, they will move in between a range. And if there is a break in a trend on both the sides, we will definitely going to reanalyze it. So there are lots of things, and say this China Evergrande set to avert default as it reportedly pays off bond interest. So for the time being, there are news that it has just paid its bond interest in the grace period, but it is not related to bond interest, or it is not only about you can pay bond interest just to technically as a default, but because you have already done that, and there is a slowdown in the Chinese uh, real estate market, so that is very much imminent. So if you made some bond payment, it doesn't matter much. Okay, so this is just on paper, this is just for the sake of uh, financial mockery or nothing else. Because if you're paying something, but your construction work or your activities are completely stalled, so what about that? So it's just on paper mockery that's going on. So I don't give much on that. But yes, if there is anything that will definitely evolve, and that will haunt us down across the globe, because understand this, Chinese are the biggest consumers of whether you're talking about real estate or cement. But if there is a slowdown, imminent slowdown in the market, you will see the impact on commodity prices. It is good actually for other countries as far as the commodity prices are concerned, because if the major demand slow down, then obviously you will get it much cheaper than the current price. So it's good in a way, but there are some implications which, so everything, market is digesting everything, and you will see hardly any movement in the trend of different financial instruments. So we will go and analyze each and everything. uh, let's see if there is anything apart from this. Let's go to the yeah, we are. Let's go and check it out. So this is what you can see. So the Dow Jones closed in positive, my plus 73.94. So closing price was 35,677. Then you have Nasdaq closed 125 points lower at 15,000. You have S&P 500. So last week it was in 4,300, 4,400. Now on a week basis it's 100 point higher, so it's made 2% on week to week basis. Apart from that, gold is moving higher. Oil is also higher. Last week it was at 20 to 82. Now it is 83.98, nearly 84. So on a week basis there is a $2 per barrel gain which we have seen. And this bond yield are making some crazy moves. So whether these are just for the trading fun, or there is anything substantial, that we will see, because the trend is much clearer that there are some gains, or there are some upside which is yet to be seen in this particular instruments. Now as far as the dollar index is concerned, it is trading near 93.61. Now we have to see whether it is, because it's again get restricted at 94.5. So whether this is the top that it has made, or it is just holding above the breakout that we have to see. So let's go and start checking one after another. So let's start with the Dow Jones Indices. Now understand this, you cannot predict the market with Dow Jones, for the simple reason that these are economy related stocks, and when inflation is higher, these stocks, or the Dow Jones, will definitely going to move. And the real pressure you will see on Nasdaq, or on stocks which are inversely correlated with the bond yields. Okay, so this is the chart as far as the Dow Jones is concerned, and you can see there is a breakout. There is a breakout that has happened in this particular indices, and the previous high that the index has made was 35,630 or 640, and the close is at 35,677. So technically this is a breakout above the range, and the range consists in between, here we are, 33,700 and 33,800, on the higher side 33,640. Now we need to confirm one thing, whether this is going to sustain or not, because this is just 20 point higher than the previous high. So we must require a further check. It's how it's going to move in the next week, and if this index closed above 35,640, obviously this is a breakout and we will go for an upside. So the range consists, or it is worth 5.5% or 1,800 points. So if there is a breakout, so the next target will be 1,800 points higher. So the next target that we are looking here will be at 37,400 and 37,500. So this is the range that we will focus on for the next week if 35,640 holds. So technically this is a breakout, and that's why inflation gives them the benefit to increase the prices. So these are industry or economy related stocks, and they will definitely get, if not all, but most of them will definitely get benefited out of it. Okay, so let's go and check the Nasdaq. The Nasdaq, as you can see here now, I've talked specifically about the Nasdaq last week, that there is a trend and the trend is holding. So even though on higher on higher time frame or higher trend, or the last high that it has made was 15,644,416, but it is not disclosely it disclosed at 15,090. So we have some more points to go, but there is a trend which you can see in this particular index. And so this is how Nasdaq is moving, okay, in between a channel, as you can see over here. And this may go down a bit, but there is a range in between which Nasdaq is moving. So this is pretty much clear, and the range in Nasdaq is 14,380 on the lower side, and we have 15,800, 850, and 16,000 on the higher side. So this is the range that we are looking here, but we will see whether this will cross 15,416 or not. Okay, so this is one thing that you need to look at. Now let's go and check the oil, because crude is not going to come down. So as you can see, it is comfortably holding above 83, and after making a big drop, this chart is saying something again and again. And I have said this thing because there are some interviews on CNBC that this is just buying time, and the rally will probably halted, and the oil price will definitely come down. But you can't see anything like this on the chart. The chart made a breakout, and it is sustaining its breakout. So you can see how beautiful the technical chart is. As far as so this is the WTI crude future. So 77 was the level that it has broken out, and now it is trading near 84. So the next range which we are going to look at, as far as this chart is concerned, or as far as the price is concerned, is, let me show it to you. So this is the higher end of the range, and we require further confirmation. Here we are. So the next target for WTI crude will be 87.1, and if it sustains above 87.1 or 87.5, somewhere in between this range, the big levels that we are looking here will be, or in between 108 and 116. So the real heat is yet to be seen. We haven't seen this kind of movement in commodities, more specifically in oil. You can see, so the oil, the crude price is actually trading us this much after 2014. So it's a 7-year high, already 7-year high. And if it start trading above 87, so we will just we will go back 10 years. That's a very significant thing that will probably happen. Obviously this is going to come down. The reason is we are in a situation where not everything is moving across the globe, and we have supply issues. We have supply issues across the globe, and that is impacting the trend or the trade. So there will be an impact, but meanwhile the kind of price movement you can see is phenomenal. So the oil producers, they are living their day after 10 or 15 years, because they are in deep pain for the last decade, for one and a half decades, but they are now getting rejoiced. So there are some big trends that you can see probably going forward. Apart from that, let's go and check out the dollar index, because we have to see this is not sustained. If you are looking, there are two ways to look at dollar index. If you are looking over here, so what we can see here is this was the breakout that has happened, but but here we can see. So 94.7 is the level that the stock faces resistance at. Now 93.4 was the level stock index made a breakout, dollar index made a breakout, and then it went up to 94.7 where it faced resistance. Now we have to see whether this is just buying time above 93.4, or and it will again go back above 94.7, or this is the high that it has made and again it will fall down. Now the reason here is very simple, because you have printed so much money. If you keep, or by any reason, if the dollar index goes up significantly higher, then it will not only put pressure on developing economies, but also for the US, for the simple reason, the first thing is equity markets are inversely correlated with the currency. Also, there are huge amount of debts that US has taken, so they have to pay in dollars. So this is not good for them as well. Now, above 94.7, there will be a chance of 97, 98. That's a possibility. But below 93.4, we have 92.67, and we have your next big support at 89 and 89.6 and 89.3. So this is a crucial situation, and we have to see how this is going to move and how the dollar index is going to make its moving forward. So on the upside you can see 97.66. So this is what we can see. Now, interestingly, the most interesting as well as the important thing are this one. So the bond yields. Now the bond yields are moving as they are going to make something different this time, and there are some big moves. So there are some big moves that you can see. This is a 10-year yield, and it is sustaining above 1.46, and it is sustaining above 1.14. So the next levels that we are going to look at will be 1.78, and we have 1.97, or 1.99. So these are the two levels that we will look at as far as the upside is concerned. But one must remember one thing, that it must not cross 2. So if the 10-year yield will go past beyond 2, then you will see some significant amount of rise, and 3.2, 3.1 or 3.2 is not very far away. So you need to understand these things, and obviously if the bond yields are continuously moving with such a drastic movement or with such a quick move, then it would be a problem. And understand one thing, this is the last part or the last chart, at least as far as this video is concerned. But this is the 2-year bond yield, and if it is moving in such a way, as you can see, a rounding bottom, but the way it is moving is telling you something. It simply tells you, beyond a certain point, it simply tells you that the near term price movement are risky, and the near term market have uncertainties, and beyond a certain point you will see the equity market won't sustain if it continuously move on the upside. So one must be, this is not only about a yield retracement, or the yield is moving higher and probably retest its previous high, but more specifically in the shorter run, if the yields move with such velocity, then obviously there are some things which are going wrong. And if it continues to move higher, so we will see 0.54 will be the resistance that we're gonna see. But if it continues to move on beyond 0.54, you have 1.1 and 1.38. Now whether it can create pressure, yes it does, because it is not only stabilizing, but if yields started moving higher beyond a certain point, you will see a dot drawdown from the emerging economies, and dollar will flow back to the original origin country. So that's one thing. And it technically means that in the short run, if the short term yields moves much faster than the long term yields, it means in the short term, analysts or market are sensing volatility or uncertainty, which will put indirect, or which will put adverse pressure as far as the equity markets are concerned. So we need to be very much cautious about it, because it is going up, but it's the velocity or the price of this particular trend that makes us worry about the market. So there are some important events that are about to happen. We don't know when will it happen, but these instruments, whether you're talking about currency or you are talking about commodity, you are talking about the yield. So if it continuously going higher, you will see that the commodity price is going to make new highs, the inflation will move higher. So whether the market or equity market or the secondary market will move along with the commodity prices or the inflation, that we need to see. But in the shorter term, uh, you are due for a short term correction, and you have seen how the short term yields are moving higher. And if this is the situation, and if this is going to make big moves, or if this is going to move near 1 point, in between 1.1 and 1.3, then you will definitely have pressure on the bond yield as far as the near term market is concerned. So you need to see these many things as far as the trend is concerned. Now as far Dow Jones and Nasdaq are concerned, you will see that the breakout has happened for the time being, but market need to be sensed in such a way that you should open for both the situations, and we will see how it's going to move in the upcoming weeks, that we will reanalyze in the next session. So this is the end of the video. If you like this content, do share your thoughts in the comment section and subscribe my channel. Lastly, take care of your family and friends.